Good morning. So here we are at the end of March. For the past winter months, we as reward professionals have probably gone through at least a few of these: pay review, bonus round, flex window, insurance renewals, long hours, noses deep in spreadsheets. Now, as we enter into the spring, we invite you to come out of the weeds and think about how we can use our rare and unique position in the reward, benefits and pensions arena to use our annual cycle to deliver company strategy and unlock value for your people, your company, and your shareholders. When I was researching today, I came across some fantastic quotes. From the German writer and statesman Goethe, "Knowledge is the treasure that creates true riches." And from the archaeologist and finder of the tomb of Tutankhamun, Howard Carter, "As my eyes became accustomed to the light, everywhere the glint of gold, I saw wondrous things." And that is what today's webinar is all about: releasing the hidden and unexpected gems often obscured in our day-to-day lives as reward professionals. So, welcome to this session. My name is Jeremy Beament and I am co-founder and director of Nudge. Today's session should take somewhere between 20 and 25 minutes, and joining me on this treasure hunt, I'm absolutely delighted to be here with Caroline Jordan, who's the benefits manager at JLT. So Caroline, good morning.
Morning.
So can you introduce yourself and give us a flavour for your people at JLT?
Sure. Good morning, everybody. I'm Caroline. I work at JLT, as Jeremy mentioned. I'm responsible for the delivery of our benefits and pension strategy, including global benefits projects as well, for example, multinational pooling. I've actually worked on the consulting side as a provider, as well as within the HR space. So I was on the consulting side for over 13 years, and then I've been in HR as benefits manager for the last 4. In terms of our people at JLT, we have 3,900 employees across 19 offices in the UK, and in total around 11,000 people globally. As many of you will have likely heard, we've recently been acquired by MMC Group, Marsh & McLennan, who own Mercer's as well. JLT may be known for its employee benefits provider division, or managing pensions and working with trustees. However, actually a larger proportion of our business is as an insurance broker and offering reinsurance. We help businesses insure against terrorism, for example, fine art, flying around the world, a Premier League football player, marine, mining, global product recall insurance, and increasingly so cyber risk insurance too.
Fabulous. Thank you so much for joining us today. So I know we've got a lot of clients listening in, but for those people who don't know us, just a very, very quick overview of Nudge and what we do. So our big picture mission statement is to create better financial futures for everyone, everywhere. We have a very ethical business model, so we're not using financial wellness or financial well-being as a front to distribute products or convert people into private clients or sell loans or whatever it might be. The only money we make are fees that our employer clients pay us on behalf of their employees to deliver personalized financial education. We very much see our purpose as helping our community, the name that we give to the employees who are using Nudge, making sure that we're helping them navigate through this treacherous world of personal finance and empowering long-term behavioral change. And the evidence we see from the use of Nudge is that people are more likely to make active selections around their benefits and pensions and are likely to save more as a consequence of the service. So how does it work? So we believe the best way of delivering financial education is through personalized technology. So each of your people will get their own version of Nudge, which contains tools and information and workflows to help them fulfill whatever their financial education need is, everything from childcare to elder care and holidays to housing. But the unique magic about how the service works is about how we come and pull them into the service through what we call nudges, which are notifications that go to people via either email, SMS or WhatsApp and are generally delivered in line with change. So for example, someone reaches a landmark age, or the government changed some legislation, or there's some kind of organizational change. So Now we're going to go on to the main subject of today's session, how your annual reward cycle can deliver company strategy and unlock value. Now, a rhetorical question for all of the people out there listening today. If I were to ask you, how many times a year do you communicate with your people during your reward cycle? Is there consistency in your approach and across all of your providers? Is there personalization and clear action? Do employees know what you're doing and why? And do your comms unlock value for the employee and the company? What would you say? So Caroline, you've got many years experience working in reward, both as you mentioned, a consultant and on the client side as well. So how do you view the current state of play in relation to benefits and reward communication in the UK? Are we missing a trick?
Definitely. You've only got to look at, for example, Amazon, Facebook and Uber to see how technology and the user experience drives and increases uptake. The benefit space is slowly evolving and certainly nudges at the forefront of that, but the rest of the industry has a long way to go. Often it's not a lack of appreciation of what we need to do, but the resources and technology and having that at our fingertips. At JLT, we definitely try and tailor comms as much as we can. Obviously, we all know the more specific and relevant, the better, but you don't always have the time and quite often the data to enable you to do that. It's also trying to understand what's going to drive the highest engagement. For example, is it messages based on personality, using the gamification aspect, the missing out type messages? So if you don't reply to this or take up this benefit by X date, you're going to miss out, which certainly work for some people. Or getting your chief executive to put his or her name to a message, that certainly drives engagement, but sadly my CEO won't put his name down next to every article I do.
Yeah, okay, perfect. So I think at Nudge, we're big believers that HR teams should make sure that you're better harnessing those key events that are happening in most of our reward calendars. So everything from how you issue your P60s to roadshows you might be doing, to your inductions, to pension governance. All of these create amazing opportunities to actually add value to your employees and the company. So to give you a few examples about how our clients, things that our clients are doing right now. So flex window. So the flex market is pretty mature. Lots of organizations have had flex in place for many years, and I think it's fair to say that a lot of those programs are actually becoming stale. We're big believers that if you're able to communicate those benefits in the context of someone's actual life, so for example flexible death in service, how that might fit with someone's mortgage, it makes it much more powerful. Also, we think that personalization around the flex window really helps as well. So rather than saying, hey, fantastic news, we've got 20 benefits for you to offer, and people just go, oh, I can't face that. Actually, if you narrow down to the 2 or 3 that are relevant for that particular individual based upon their particular circumstances, we actually see some really incredible results. So when we, for example, compare before and after Nudge is in place, actually after Nudge is implemented, there's a 15% increase in active flex selections, which actually increases again to 20% where there's a single sign-on in place. Another example, so one of our clients came to us a couple of years ago and said, we did a survey after our pension provider issued their pension statements, and actually only 5% of people who came back on that survey said that they'd opened the pension statements. So, you know, what a trick are you missing that actually, and the problem is, I think, you know, being fair to the pension providers, they're not comms experts, so they send through this 12-page, pretty dry, highly regulated letter. People can't make head nor tail of it. But actually, how cool would it be if the day you know that those pension statements are going to be delivered, that actually you send a how to read your pension statement in 30 seconds jargon buster? And the evidence we see from clients who do that, like for example one of our clients, Samsung, is that there's a much larger proportion of people who then open their statements up to and above 50%. To give you another example, so auto enrolment increases are obviously coming through in April. A lot of organisations out there are just doing a straight comms, hey, pensions are important and you're now going to be paying more. But actually, a lot of our clients, what they've done, which I think is really clever, is actually in the lead up to the auto enrolment increases, is help people understand how they can save money elsewhere in their lives, like, for example, their utility bills, in order to be able to afford those increases and therefore ensure that people are engaging with their pension and definitely not opting out. And then the final example, client example. So we did an analysis. So for us, we think that financial well-being shouldn't just be about the employee, but should actually be about the wider family as well. And when we did an analysis over the course of the last year, a typical extended family actually could have an extra £4,600 in their pocket from everything from making sure that you have the best utilities rates, to making sure that your mobile phone bills are correct, making sure that you're taking advantage of the lifetime ISA and so on and so forth. So a lot of our clients are utilising pay review as a way of getting people to actually engage with their money. Hey, this is how much you're getting each year, and actually though, what else extra could you have by being smarter with your money outside of the workplace? I also think that there are some really clear return on investment opportunities as well. So to give you 3 client examples on bonus sacrifice. So what these 3 particular clients do is split the employer NI savings 50-50, so 6.9% they keep, 6.9% they give back. So it's still a pretty good benefit for the employee. And actually what we saw was increases in bonus sacrifice take up by 320%, 800% and 1,000%, which more than pays for any of these services that you're introducing. So Caroline, what would you say were the major events in your reward calendar that you want to harness in 2019?
Well, aside from the big ticket items like you've just mentioned around the auto enrolment increases in April and our flex window, which is actually open at the moment, we want to really leverage the less obvious opportunities. For example, the bonus sacrifice that you've just mentioned, bonus period for ourselves is March, and during February we operate bonus sacrifice. This year it was particularly important given for those with carry forward, it's the last year of the big carry forward before the tapering annual allowance came in. So it's really important to make those employees aware of that. The second aspect for us is the Mental Health Awareness Week in May. So this is going to be quite key for us. Last year we trained up over 60 mental health first aider volunteers across all of our UK offices, which was a fantastic initiative. It's going really well and is actually starting to change the culture at JLT and the awareness and acceptance of mental ill health, which is great. In regards to the week in May, the volunteers, because they're so passionate about the cause and helping, they're actually helping to arrange these events in their own offices, and using that week is an opportunity to remind staff of existing benefits as well. For example, healthcare and possibly CBT, or the employee assistance programme and face-to-face counselling. And it's also a chance to remind them of some more recent benefits that we've introduced, such as nudge and mortgage advice service for those with any financial worries. I do strongly recommend asking for volunteers for mental health first aiders rather than making it compulsory, because they're so passionate about the cause and help provide ideas to the benefits team as well on ways to take the initiative forward. Probably the final big event for us is going to be Carers Week in June, because elder care, we haven't particularly done very much on elder care to date, and I know employees, as in most companies, are affected by the balance of trying to look after parents and possibly children at the same time, having to take time off work. So we will be marking that this year as well for the first time, and reminding people about flexible working, about a provider and website resources we've got to help with elder care and childcare as well.
Yeah, I think when we were preparing for this webinar, I think when you spoke about mental health first aiders, it really struck a chord with me, because for me, this is one of the fastest growing and most prevalent trends in the UK reward market at the moment. And bearing in mind, I think a year ago that term mental health first aiders, I would hear very, very rarely. I'm probably hearing it 3 times a week now. And I think it's fantastic how, because people like, for example, Prince William and Prince Harry have really got behind this and reduced the stigma because of our returning service people. It's fantastic that corporates are also really engaging with this, and yeah, I'm a huge fan of it. So I'm so glad to hear that you're getting behind it at JLT.
Yeah, for example, recently we ran a line managers training around stress awareness and how to support their teams, completely voluntary, and we've just finished training over 160 line managers on that. Whereas if we'd have, in the past, any other line manager voluntary training we've done, we'd have never have got that kind of interest and uptake. So it does show the cultural shift, not just within the organisation, but as you say, within the society.
Yeah, I think one of the key themes that came across actually with the stuff that you're doing at the moment, which I really like your approach, is about the way that you're cascading, and actually you're not saying to, as a reward team, right, we're going to run every training session, we're going to do everything, we're the superheroes. You're actually enabling, in that example there, your line managers to understand more, so that the company as a whole are working together, and that was one of the key themes when we were talking that really came across. Cool. So let's turn our attention now to how the reward cycle can support the wider business strategy. So I'm going to give you a few examples here that hopefully will get you thinking about how some of our clients have particular business challenges, and then they're using their expertise within reward and their providers within reward to help support those particular business objectives. So the economy is uncertain at the moment. We're all reading about the fact that car manufacturing in the UK is going through a really difficult time, by way of example. And unfortunately, I think that there are going to be a lot of organisations out there who are going to be going through redundancy programs over the next 12 months. So one really innovative company we work with who are sadly going through one of these changes, what they did, which I thought was really clever, was that they did a big campaign around pension engagement with those people who, because they had historically been in a defined benefit environment, that actually where people might be eligible to take early retirement. And as a consequence of that, and giving people that education of understanding what do they need in retirement, what their objectives, what are the total pension savings they have, and so on and so forth, that actually rather than making people redundant who didn't necessarily want to be, that actually they were able to cut the pain quite significantly by actually enabling those people who wanted to retire early to retire, which meant that there were fewer people then to make redundant. And I thought that was really smart. To give you another example, so in some of the sectors we work in, I'd say probably legal, the most prevalent, that actually there is a major war for talent with graduates. And quite a few of the law firms we're working with, what they're doing, again, which I think is quite innovative, is that they're opening some of their benefits like Nudge to these potential recruits actually when they're going through their law conversion course. So this is before they've even joined the firm. So what they're basically doing is supporting those people in their lives of, these people might be renting for the first time, for example. It might be the first time they're receiving any money, the first time they're receiving a payslip. They're enabling those people to really understand the world of money and support them through that time. Another example, So corporate social responsibility remains a really big agenda point, I think, for executives in particularly large companies. And actually what we're finding a lot of our clients are saying is, it's great that we're supporting our employees, but actually we also want to support our people's wider families. So there's a lot we can do there about providing people with education, for example, when their kids are at university, or enabling their partners to also join the program, but also supporting the wider community. So a couple of the banks we work with, for example, are very keen to provide financial education into schools. So in the US, this is massive. So they have something in the US that they call K-12, which is that age group of kindergarten up to 12 years old, where banks are paying, sponsoring financial education programs for the kids who are currently going through schools. And that's a trend that we expect to see coming in the UK. And then by way of a final example, so the B word, what a lot of companies who are entirely reliant on international people to come and work for them, they're very concerned that actually what the B word means is that the UK is basically saying you're not welcome, and a lot of people might be put off and instead go to New York or Singapore or Paris or Frankfurt or whatever it might be. And actually where we're helping those companies is by creating a new to the UK module, so that those people are assimilated really easily into the UK. They can build their credit score, they can get a guide to UK banking, they can understand how much they should be spending on their utilities bills, what their rights are, and so on and so forth. So it's a really nice thing to be able to do, to say, hey, the B word might be happening, but actually, or maybe not, but actually this company is welcoming you to the UK. So there's just a few ideas there about, and hopefully bringing to life the fact that your companies have these big picture objectives or challenges, and actually how we in the reward and financial wellbeing space, how we can support them. So I know you've put a lot of work into this area in the last year as part of your talent management strategy. So what have you been doing?
Thanks, Jeremy. Yeah, you're right. So as reward professionals, we do need to move away from providing benefits just because, and as a tick box exercise, and think much more carefully about how they support our wider HR strategy. In the last year, we've been particularly focused on improving the support we offer to families. I can give you 3 good examples of this. We've been improving the support we offer to new mothers to increase our return to work rate. This has included providing maternity workshops, so we run them pre-maternity leave, during, and also when our maternity leavers come back to work, and adjusting to their new work-life balance. We've also introduced a breastfeeding room at our London office. So it's got a fridge in there, for example, a sofa, lockable storage containers to keep the milk in the fridge. And as an extra to that initiative is we provide, where managers would like it, one-to-one coaching for the managers of those maternity leavers as well, just to help them understand how they can best support those employees too.
Okay, fabulous.
A second thing we've done is launch a virtual GP service, which is an incredible benefit, had a really high engagement and impact in a very short space of time. So for our virtual GP, we fund it for our employees, but they can also add on their partners and children for a couple of pounds a month. It's really, really affordable. It's become incredibly popular. It not only helps our employees get treated and recover quickly, but helps lower our short-term absence rate. Employees I've seen have been so enthusiastic about this and received such good service that they've actually been making comments on LinkedIn, which is always good to read as well. Probably the third example is around a rehabilitation service that we've been utilising for our medium and long-term sickness. That's halved the number of people going on to our long-term sickness insurance claims, which is obviously better for the employees because we're getting them back to good health quicker. Helps their teams because they're no longer under resource, and obviously better for the business overall too.
So I'm going to put you on the spot here. So are you able to put a kind of pounds and pence figure on some of this stuff? So are you being asked for return on investment opportunities or evidence? And if not, do you think that reward people should be?
I'm not personally asked. I think the business can see the wider picture and see the value it's creating, especially when they use the benefits themselves. I mean, the virtual GP one, I've got loads of feedback on that and emails. As I mentioned, very public ones on LinkedIn as well, so they can really easily see. I could show them some cost savings on that, reduced number of days off sickness. We do in London fund a GP on site, and we're quite often now where they can't get in with their GP downstairs saying, remember your virtual GP. So longer term, as people get used to using the virtual GP, it is going to reduce the cost of us funding a GP on site. And we did actually launch the virtual GP originally to ensure all of our offices across the UK all had access to a GP quickly. And this one, I've used it myself for my son and got a prescription delivered to the local pharmacy down the road without having to take any time off work. So yeah, it's quite easy to show, but in pound notes, no, I haven't been asked. And I guess, yeah, there are factors you could work it out.
Yeah, I think you're probably in quite an enviable position because you work for a company who a lot of your people are in employee benefits, so the company kind of gets it, don't they? But I wonder, when you were speaking there, it was just so clear that there would be those return on investment opportunities, and I bet actually we could calculate what it was. So no, that's very good. Thank you very much. So the next thing we were going to talk about was legislative change. So there's a huge amount of legislative and market change across all areas of personal finance that impacts employee benefits and reward and impacts your people in different ways. And wanted to talk to you now about a few examples here about how you can potentially use those events as well. So this is 2019 calendar that we've put together that details some of the key events that will be impacting your people. You can download this from our website. A great example are these forthcoming auto enrollment contribution increases in April. So the DWP just released some research showing that they found that very few employees are even aware that they and their employer are about to pay more. However, contrary to much of the media coverage, employees' reaction to the news tended to be neutral or actually in a lot of cases positive, with many pleased that the increase will help them save more for retirement, and they rarely say that they want to opt out. So as a consequence, what a missed opportunity for employers there, that this should have been the moment when people actually went, right, this vague thing called a pension, this vague thing called retirement when we don't want to work anymore, that actually now's the opportunity to work out where am I with my retirement savings and what do I need to do to get the retirement that I desire. So those triggers are the perfect opportunity to start that debate. It really stops it, or turns it rather, from being something nebulous to something that's real. And then tying it back to company strategy again, particularly for those companies who have those future workforce planning issues. So we speak to a lot of companies who say we've got an aging population, we've got people who we know they're not saving adequately for their retirement. We know that in 15, 20 years time, those people aren't going to be able to afford to retire. So we're going to have a lot of people hanging around the business who don't want to be here. They're going to be miserable, or benefits costs are going to ramp up. It's going to stop young talent coming through. So let's confront those issues now, and the perfect opportunity to do that are things like legislative changes like auto enrollment. So big question for you, Caroline. Do you think it's the employer's responsibility to communicate legislative change?
They've definitely got a huge part to play. As you alluded to there, employers generally aren't equipped or prepared, so busy dealing with the day-to-day, that being proactive and using all of these great opportunities to our advantage generally doesn't happen. The advance notice of certain events and legislation, you kindly mentioned there about your fantastic summary that you do provide, and other providers give. It is a chance for companies to step back and invest the time now to gain a much better engagement level in the longer term. I know it's hard, particularly smaller organisations where they don't have a benefits manager, and it's often a HRD or FD trying to run the benefits as well as the rest of their role. One example we had was with the childcare voucher changes, and we just used that as a chance to notify people of the government scheme. So we needed to do some work anyway in removing the vouchers for new employees, but instead of just deleting it and saying we don't deal with that anymore, we created a new benefit to signpost employees to the government resources. So it isn't related to the employer anymore. It's not a benefit we're providing. However, we did see it as a chance to help educate our people, which has without doubt reduced the number of queries we've had since. So that bit of short-term work to use one of the legislative changes to your example can really increase engagement for the longer term.
Yeah, perfect. So what I've done, I've categorized, I think, legislative change into 3 different buckets. So category 1, I would say it's clear that the employer has a role. So the examples I would give are tapered annual allowance, for example, on pensions. I would say childcare voucher change, and I would say change to salary sacrifice rules. So that's category number 1. Category number 2 is where it's clear that there's a benefit to you as an employer to get involved. So, for example, housing, making sure that you're communicating things like the lifetime ISA and help to buy program, because ultimately, if your people can't live near where you work, then talent will suffer. And then the third category is where there is a downside if you don't. So, for example, there's a little known event that happened last year called the requirement to correct, where people with overseas earnings had to register them with HMRC by the 30th of September. Failure to do so, the maximum penalty was imprisonment. So clearly making sure that your people are not falling foul of those kind of risks is something that is a good thing to do. I also think one of the things we talk about and reward a lot is about managing risk. And actually, we think that by providing this kind of risk and governance framework around legislative change and making sure that people are kept up to date with them, and making sure that from an HR point of view that you create an audit trail so that not only are you doing the right thing by telling your people, but you're also proving that you have told your people, that can only be a good thing from a governance point of view. It's all about providing clear support for your people through things like pension change, housing, childcare, elder care, all of those things that matter. Okay. So we're now going to turn our attention to how you can utilize life events for maximum effect. So in behavioral economics, one of the things that we're very keen on is what we call situational bias. So basically, human beings, we think that we're fully aware, but actually we miss more than half of the stuff that's going on, and it's because the human brain can only cope with a certain amount of information in any given moment. The classic example of this is you've never heard of a company before, then they come into your life for whatever reason, and then you just see every one of their vans on a motorway or every one of their adverts on TV. That's an example of situational bias. And actually what we find is that where we use life events to create that situational bias, that when we at Nudge are delivering financial education, when we deliver education within 1 month of a life event, then actually there's 80% greater engagement, which is just incredible. So you can use things like landmark age to engage people with their retirement goals. You can use things that, let's take some of your benefits that are maybe not particular or don't appear to be particularly cool, like your employee assistance program or your death in service, and link them with getting on the housing ladder. So that's a great example of moving home, of how you can bring your benefits to life. Or there's things like supporting the wider family around when they have kids or when they get married or when they're starting to care for an elderly dependent. So what's your view on life events, Caroline?
Yeah, I would say that life events definitely present an easy win that all employers need to get better at harnessing. As an employer, you know a lot about your people, but you're also really trusted with a lot of their information as well. As an employee myself, who's recently been on maternity leave and returned to work, I've also experienced it from the other side. So your employer can really help you understand the benefits that are relevant to you based on, as you said, what's happening in your life. I think showing support for your employees at these critical times can really help engage them, something that we all want to do better at. Some events as well, if you think about certain life events, they're also incredibly emotional time for our people. For example, going through a divorce, which is without doubt and understandably very distracting for that employee from their tasks of their working day. We recently introduced a divorce support service, which we engage with when we feel it's appropriate. And that does anything for our employees from helping with admin and booking removal vans, for example, through to supporting on legal questions. So really trying to help take away some of the worries with what they're dealing with at that particular time in their life.
Yeah, I thought that was a really cool example. I have to admit, I'd not heard of the divorce support service before, so I think that is really innovative and cool. So thank you for sharing that with us. So the last thing we were going to look at today is around how financial education can actually help you increase the commercial awareness and acumen of your workforce. And now we're getting more and more clients, particularly in the legal sector, because they're a partnership model, and every pound that's spent is a pound that doesn't go into the partners pool, and also in the financial services sector, because ultimately you are liaising, or your people are liaising with your customers and clients about financial matters. And actually, if your people don't have any financial acumen, then how can they do that to best effect? That those are actually the drivers for the project, which I think is really interesting. So you're a FTSE company, you're in financial services. Is this a key area for your leaders?
Yeah, absolutely. I think because we're in financial services, there's an assumption that our employees know all about finance and they're experts themselves, which is certainly not the case. So it is really important for our board that our people are financially educated. We do invest, as a lot of companies do, invest heavily in training programs and qualifications, but also on the softer side, we run seminars on retirement, our share schemes, the different types, and any tax implications that might arise, and also pensions, which those that know our JLT employee benefits division will perhaps find strange that we run pension seminars, but actually the majority of our employees don't work in the pension space and often don't fully understand how they work, and annual allowance, the tapering, for example. So we run sessions on that and how to use our benefit system and choose their own funds, do the risk profiling, etc. And then we do general financial education, for example, when we launched NUDGE last year and ran the financial education seminars too.
Cool. So that brings us to a close. Caroline, I have to say, I love that. Thank you very much indeed. You're a star. So I hope for those people who are listening in that gave you plenty of ideas and that you're going to be excited to take away about how you can link your reward back to all of these cool things that you can be doing for your people and your company. We'll be sharing a recording of this session so you can listen again or share with your team. And if you would like to speak to me, please do get in touch via hello@nudge-global.com. So happy treasure hunting. Thank you. Goodbye.